Randy Smallwood is chair of the World Gold Council and CEO of Wheaton Precious Metals, and his company had its quarter today. Randy, welcome back to Kitco.
Always a pleasure, Michael. Thank you.
Can you highlight Q3 for us?
Yeah, it's. It was a good quarter for us. It's a little bit of a holdback on sales, but we're kind of used to seeing that in the third quarter. Things kind of build up, and then in fourth quarter, everyone kind of clears out the pipelines, so to speak. And so yeah, production wise, we're still on track. In fact, we tightened up our guidance over the quarter, and a little bit more silver than we expected at the start of the year, and a little bit less gold, but overall, the same gold equivalent ounces in the end. So a good, strong quarter.
I noticed that you did highlight what was happening with the Phoenix mine in Rio 2.
Yes. Well, we're looking forward to closing that deal here very shortly. We're probably weeks away from getting that one done. It's a good looking project, a little bit small on our side, but we do think there's great upside in that asset. And so I think it will fit into our portfolio very nicely.
I'm going to throw away the script here, Randy, but I think it leads in quite well. You're talking long term right now that you're going to be adding an extra 100,000 ounces by the end of the decade in 2030. Where is that going to be coming from? Is that like contributions from Rio 2?
Yeah, a lot of other projects. Rio 2 actually wasn't part of that forecast when we made that forecast going forward, so it'll be over and above that. And I would assume, just based on our activity levels, there will be further acquisitions beyond that. So I don't think it's going to take us a decade to add another 100,000 ounces. It'll come a lot faster than that, especially given the market we see right now for precious metal streaming opportunities. But most of the growth internally is going to come out of Salobo with the phase 3 coming on at the end of next year, or Salobo 3 coming on next year. One of the things that isn't even factored into that is the fact that Salobo 4 has been talked about by Vale. It hasn't been committed to yet, but all you have to do is look at the way phase 3 is being built, and you know that it's set up to be twinned with a fourth line right beside it. And so there's no doubt it's going to happen. It's just a matter of when. Vale has given some guidance. I think they said 2028 is when they were hoping to have it done, but they just haven't committed to it yet. So it's not part of our guidance going forward. But we're also getting great performances out of so many of our assets. Antamina has really stepped it up this year. Peñasquito, Newmont's done a fantastic job at Peñasquito in terms of making that outperform. Hudbay at the Constancia, the Pampacancha zone, is now delivering and very good record gold production out of the Constancia copper mine, and so we're seeing some definite growth in there. Voisey's Bay is of course delivering to us this year, and we've seen good progress there, and we expect to start seeing some of the underground feed shortly from both the Eastern Deeps and from the entire underground complex. And so yeah, it's everywhere we look, we see good, strong growth organically, and we're also very, very active on the corporate development front. New opportunities out there. So we're not going to have any problem getting 100,000 ounces more production. It's not going to take us a decade.
Randy, I noticed that mining CEOs pay attention to what's happening with their capital projects and just making sure that they're running on time. But I'm noticing that they're paying extra attention right now just because of all of the supplier issues that we see. Can you talk about that yourself as well too? Do you see any when people are talking to their suppliers, whether it's going to be a Metso or a Caterpillar or a Komatsu or something like that, is there any supply snafus that they could be worried about?
Well, there's no doubt we're seeing the risk of significant inflation starting to play a more and more important role. We see extra costs, and all you have to do is look at the commodity prices out there to see, those costs. The fact that copper is trading at record highs, the fact that lead and zinc are all at highs, gold and silver, everywhere you look, nickel, it's good, strong commodity prices. That eventually has to work its way through to higher costs from an inflation perspective. Those are the core materials that we build all of our products from. And so there's no doubt that inflation is becoming a greater and greater risk as we go forward, and it's going to play into it. I will say that right now, because the commodity prices have climbed substantially, it's probably, especially in the base metal space, the extra margins afforded by those higher commodity prices have given us given the industry, the mining industry, the capacity to make some capital decisions going forward with confidence that they're going to be there. But there's definitely going to be a higher degree of cost risk in terms of delivering. again, it's one of the reasons why we created the streaming model way back in 2004. Is that if you need exposure into the mining industry, and in our case into the precious metal space, and you don't want to take that cost risk, it really sort of highlights one of the structural advantages of the streaming model as a means of investing into that space. We still get all the organic upside, the growth and the expansion potential, but our capital costs and our operating costs are all defined by the contract, and dramatically lower risk than what I think we're going to see over the next few years in the mining industry.
It's been noted, Agnico Eagle put it into their quarterly, just talking about what they were seeing with diesel prices. It also, I assume that also kind of goes into explosives as well too, Randy.
No doubt. I think it goes across the board. Just look at, iron ore. You look at what iron ore prices have been over the last few years. That goes into steel. Steel is what's used for the infrastructure to build all these, heavy mining projects, mining equipments and stuff like that. And so, it's across the spectrum. And there's no doubt with respect to energy and oil and diesel, directly, that's something that has a dramatic, immediate impact all the way through. It doesn't have to work its way all the way through the refining and smelting and such process. It hits the bottom line immediately.
Randy, I assume you're finally visiting mines and seeing projects.
Yeah, we are. It's nice. The technical teams are out there doing proper due diligence, and we still have some good outside support, and risk is something that we're staying on top of and making sure that we take more than appropriate measures to minimize risk on all fronts. We haven't started visiting existing operations yet. Our existing partners, we think there's probably still a few more months of getting comfortable with the current state of affairs, worldwide. And so, but hopeful that sometime in 2022 we'll get back to actually visiting the existing sites. But when it comes to new opportunities, yes, we've had a number of site visits over the last quarter, and it's definitely picking up.
Is M&A in the precious metal space muted? There was the Kirkland and Agnico deal that was announced recently, but say compared to battery metals, where you see what Sibanye-Stillwater's up to or what happened with Lithium Americas, it just seems relatively quiet.
I think it's probably a small little period, in terms of I actually wouldn't say it's quiet. I think there's a lot of interest out there. One of the challenges in terms of growth is it is getting incredibly tough to build greenfields operations around the world. The challenges of and the expectations and the standards just make it more and more challenging to move forward that way. And so anyone that's got to satisfy growth expectations, you start looking around at making investments into smaller peers and sort of getting your foothold. And I would argue that, I think there was some investments from Barrick just recently into some smaller juniors that sort of highlight, a strategy going forward. And so I do think that there will continue to be acquisitions, especially if you look at the in the precious metal space. There's a lot of very healthy operations that don't have very long lives in front of them out there right now. And so there's a lot of the big producers that have to find ways to fill that production gap 5-10 years out. And so I do think it's going to continue to pick up and move down that path. It's definitely a little bit more attractive than to try to build things from a greenfields perspective. Obviously, the quality of the assets is what drives which way any company goes going forward. But yeah, I still expect it to be very healthy.
Now, in your quarter, you announced that you'd spent $4 million of the $5 million of the COVID relief fund that you announced last year. How does the pandemic look to you when you're touring operations globally? I noted that Newmont, for instance, out of the blue, it had a little bit of a disruption due to what was happening with Australia. Is it? Where are we right now on this pandemic? And when you're talking to miners, how are they dealing with it operationally?
Well, definitely around the world, there's different risk profiles for different jurisdictions around the world. There's no doubt that certain jurisdictions are having it a little bit tougher than others. I would say in a general sense in the mining industry, one of the other challenges has been underground operations. We've seen a bit of an impact in terms of productivity per man shift in underground operations. It seems to have had a bigger impact in terms of some of the risk management protocols that have been put in place, it has reduced the productivity on a per person shift. And so that's a pretty general thing. As you mentioned, we've put $4 million. We've actually committed the entire $5 million. The last $1 million is still going in. That went to a lot of different frontline support systems. When we looked around the world and when this pandemic first hit, there was a real focus on urban areas, but the rural communities just in a lot of places, especially in South America, and I'm sure in places in Africa, although we don't operate in Africa, but the rural communities didn't have anywhere near the same degree of support in the early stages of this pandemic. And so our real focus was trying to push as much of that support and to the front lines in these rural communities. And so we've supported ambulances. We did a very interesting program with Vale in northern Brazil, where we produced over 1.5 million face masks, through local seamstresses. So it generated not only access to face masks to try and minimize risk, but it also stimulated the economy and sort of brought in a bit more business exposure there. And so, there's a number of different areas that we put focus onto, and it was just the right thing to do in the case. We're relatively fortunate in that precious metal space in terms of the impact of the pandemic, and especially what it had with respect to precious metal prices. And so there's no doubt it was time to give some back to those that were being most impacted from the pandemic.
Randy, thanks for your time.
Always a pleasure, Michael. Thank you.
He's Randy Smallwood, CEO of Wheaton Precious Metals. My name is Michael McRae, and you're watching Kitco Mining.